Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. Not too many things to comment today, as market is just waking up after long holidays in the United States. As you know, it was President's Day yesterday, so markets mostly were closed. And you can see euro currency is calling around the same area that we saw on Friday and that we talked about on weekend. And still, there are some minor details have appeared on the market that could lead us to estimate the shape of the price action that we could get today and to set some levels that we need to keep an eye on. So that could become very important levels for a short-term perspective, where market should stay above it to keep the overall bullish sentiment that we have currently. Because if levels that we will discuss will be broken down, that could change the short-term context and could lead for a deeper retracement, a strong downside action. With the current fundamental environment, it seems not very probable, but we don't know what particular news could be released on this week, and maybe something will be announced that could change the overall direction. So, on the daily chart, everything stands the same. Trend stands bullish here, market stands in tight range, and we actually here waiting for reaching of these levels, around 120, 185, as we said, 122. That's because of the potential reverse head and shoulders pattern that we are watching, and we hope that we will get it. Just because on the longer term charts, especially on the dollar index, we have untouched major target, and that also that stands below the market on the dollar index, which means that on the euro currency it should show some upward action, and appearing on the head and shoulders in the current circumstances looks logical. So on the follow time frame chart, still with the pattern that we're keeping an eye on, so left shoulder, head, right shoulder, we still have some not very pleasant moments. We have the bearish grabber, guys, on the follow time frame chart, and here's we could get another one. Well, the minimum target of this grabber stands very close, so actually market should drop slightly below these lows. And that could be just minor reaction down, taking out of these lows, and then upward continuation, or potentially market could follow to the downside. So we would like to see the minimum target, just because we have the bullish context and we're watching when the market will hit this level. That's why for us it is crucial to see that market will stay somewhere above of 120, 110 area approximately. And based on the hourly picture, it also explains why we need this. So first of all, speaking on the target stands at the XOP that has not been reached yet. It's 2183, that's where I was still watching, that creates an agreement with the neckline and so on. So we talked about this many times already. But with this downward action, it is crucial to see that market will stay inside this swing. Unfortunately, the butterfly that we have discussed in the weekly report can't be formed, just because this top is slightly greater than this one. So we've got minor responding wash and rinse of this top, which means that no butterfly is possible. Alternatively, what we could recognize, you're absolutely right, we could recognize here the reverse head and shoulders on the top. For the modern market, it's become common thing. So, and from that standpoint, it seems that the harmonic bottom should stay somewhere around 2110, 21 area. So with confidence, very good position actually, because, well, grabber, minimal target of the follow time frame grabber will be confirmed and completed when market will drop below these lows. Simultaneously, with the breaking these lows, market will not break the overall shape of the head and shoulders yet. And when the market will do this, we could use this confluence as a barrier where we could hide our stops, taking the long position on the perspective of possible upward reversal. Because when the market will hit the confluence at the first time, whether we will be right or whether we will be wrong, some pullback here should happen, some minor pullback, and this led us to move stops to the break-even. If we will be right, we will see upward continuations in 21.85. If market will drop below the comfort of starting dropping back to these lows, don't be long, because it will mean that market will show some deeper retracement. And in this case, market could drop as far as to the 2050, 2030 area, somewhere to this level. In this case, there's a chance that market could just erase this ABCD pattern exist. Because that will be the failure of the short-term context, this market will show irrational type of action that it should not show if it stands bullish. So bullish market should not show this type of action. It should stay inside of this range. And that's particularly what we will keep an eye on. So, as you can see, in general, overall context looks clear. We have different level to keep an eye on. So we do know about what level market has to stay to keep the bullish context. And we hope that the grabbers that we have on the follow time frame chart hits only minimal target. With the 21.15, 21.20 losses will be taken out. And then we will see whether this reverse head and shoulders form will be formed. So that's approximately what we intend to keep an eye on today.